Hey guys, welcome back. My name is Clyde, and today I'm going to share with you a post that I made through the Trading 212 Bitcoin forum. But first, here's my ISA portfolio reveal. My portfolio is currently £60,000. It used to be £80,000 on 17th July, but as you could see, strategy took a beating here, which led to my portfolio going down to £60,000 by 20th August. So in just 1 month, my portfolio went down £20,000. But I'm not too worried about that because I've seen worse, such as the beginning of this year. My portfolio went all the way down to £34,000. But I've doubled my money since then. And I'm pretty much up 82%. My average buy price is $178. Now, the thing about strategy is that I believe in it long term. Their business model is very unique from many companies out there. In fact, strategy is the only one doing this. So what does strategy do? They pretty much take money from the fixed income market as well as the money market and are pouring it into Bitcoin. They buy Bitcoin in their balance sheet using the money they take from the fixed income markets, so bonds pretty much. And as you can see here in this diagram, the bonds market is the second biggest market cap in the world. The first one is real estate. Strategy is targeting the bonds market as well as the money market with their preferred stocks. They take fiat currencies from the bonds market as well as the money market and feed it into Bitcoin. The valuation of strategy increases because their balance sheet increases in value due to Bitcoin rising in price. Apple, Google, and many of these tech stocks are not targeting this level of market cap. Their market cap is pretty much limited, but strategy takes it all the way to the bonds market and the money market. And since it's a stock, it's also targeting the equities market. No companies are doing this. Strategy is the first of its kind. It's the only one. They're able to use their balance sheet as their product because they own a lot of Bitcoin. The most Bitcoin out of any public companies out there. Some would argue that BlackRock owns more than strategy. The truth is BlackRock doesn't own Bitcoin in their balance sheet. They hold Bitcoin for their clients, and so the Bitcoin they hold, they can't do anything with it. They can't make a product out of the Bitcoin they hold. Strategy, on the other hand, they own the Bitcoin in their balance sheet, therefore they can make products out of it. And that's the difference. This is what makes strategy so unique out of every companies in the world. But anyways, let's go to the post that I made in the Bitcoin forum. As you can see, I'm first place in the feed, and it's been 5 days since I made that post. Seriously, nobody's active in the Bitcoin forum, surprisingly. So let's take a look at what I wrote, and I'll break it down with you. You swallowed the wrong pill. If you think holding Bitcoin hands the future to ultra-rich hedge funds, you've swallowed the wrong pill. When you invest in the S&P 500, ETFs, or your pension fund, you are literally funding the biggest hedge funds on the planet. BlackRock, Vanguard, State Street, the list goes on. They own controlling stakes in nearly every major public companies, from Apple to Exxon to JP Morgan. They also own huge chunks of real assets, such as houses, farmlands, ports, and energy infrastructure. They earn billions in annual fees just for holding your money, and they take advantage of carried interest loophole to pay a lower tax rate than you do. They lobby governments, influence regulation, and profit during every boom and bust. Bitcoin doesn't work that way. No CEO, no management fee, no dilution, no lobbyists. You hold it directly on chain, you secure it yourself. No boardroom can vote to inflate the supply or redirect it to their own pockets. And to say the rich owns most Bitcoin, Bitcoin actually grew without the rich even noticing. They're late to the party. To control Bitcoin, they wouldn't just need coins, they need to control the majority of the mining network spread across the globe in multiple jurisdictions powered by different energy sources. So at this point, controlling Bitcoin is just impossible. Many founders of other coins have tried to exert control through their own unregistered securities. Altcoins like XRP and ETH are designed so that holding more coins gives more influence, something Bitcoin's network does not allow, making it truly decentralized and resistant to manipulation. Reality check: if you're worried about unelected ultra-rich controlling the future, the stock market is their machine, your pension fund is their piggy bank, and altcoins are their playground. Bitcoin is the one place they can't rig the rules. And here's the picture of Sailor holding the orange pill and the blue pill. One choice changes it all. So what does this post mean? This post was actually in response to a comment I received on a previous post where someone was just giving out false information about Bitcoin. He doesn't understand that the first movers of Bitcoin were actually the regular people, not the ultra-rich hedge funds that he proclaims it to be. So that's what I was pretty much implying on the first part of this post. People who invest in their pension funds, their retirement funds, and obviously the S&P 500 and any other stocks in a stock market, they're the ones making the hedge funds, the people on top, even richer because they just collect fees from investors like us. And the worst part is they pay much lower taxes because of the carried interest loophole. But you can do your own research on that, on how carried interest loophole works. And this post is also saying that Bitcoin is the solution to all these degenerate behaviors caused by money printers. The ultra rich, the elites, they can influence government rules and regulations that benefits in their favor, and in the same time they also get rewarded through bailouts by the government. And so in order to stop the rich from getting bailed out by the governments who you pay taxes towards, you have to put a stop in their money printers, and Bitcoin is the solution for that. Because Bitcoin's network is transparent, you can see every transactions made, you can't hide where the money goes. Plus, it's fixed in supply, only 21 million coins that will ever be in existence. Fiat currencies are infinite, therefore it allows a lot of bailouts and misuse of capital, causing inflation in the economy. Now let's have a look at what some people said in the comments section, starting with MSJJ. I agree with all that you say. My reservation is that Bitcoin is the creation of one individual and there is no way to understand why he created it. Yes, it could be for the reason you mentioned. However, I think his reasoning is to teach those who buy a lesson in the folly of greed and speculation. And my response to that was, Satoshi created Bitcoin to stop the rich from bailing out banks and inflating the economy, to give people money that can't be manipulated by the top. At this point, who Satoshi was doesn't matter anymore, because Bitcoin runs on proof of work, a global consensus verified by energy, not trust in a single person or institution. That's what banks are. That's what governments are. Its rules are fixed and can't be changed by anyone, no matter how rich or powerful. No response from that guy ever since. However, there is another comment, and it's by our master. True, money does indeed flow upwards and everything is designed to benefit the top, but Bitcoin is a purchasable asset. Anyone can buy it. Therefore, those with the most money will eventually buy most of it up. It's inevitable, just like every other asset class, gold, land, shares. Not saying that that makes it a poor investment, but there is no way that the hedge funds and the rich you mention will not have ultimate control. Eventually. I read somewhere BlackRock bought up 3% of all Bitcoin like a silent ninja. Who knows how much more they can own in 10 years. I deleted my first message because there was a grammar error. My response was, owning a lot of Bitcoin doesn't give anyone control over the network. Unlike proof-of-stake coins like Ethereum, Bitcoin runs on proof of work. To take control of Bitcoin, the rich will need 51% of the entire mining network, which is practically impossible. Hedge funds can buy up supply, but they can't change the rules or seize Bitcoin like they can influence other assets. That's the key difference between Bitcoin, gold, land, shares, and altcoins. He said, OPEC don't control the world's oil infrastructure, but they do influence the global oil prices because they hold most of the supply. My response? I get the concern. Luckily, Bitcoin isn't like oil. OPEC can restrict physical supply and control prices, but Bitcoin is digital and its supply is fixed. Long-term holders, people who lock their coins for years or even die with them in self-custody, permanently reduce the circulating supply. This creates a natural flaw and protects the network from being monopolized by the rich. Even if the wealthy investors buy large amounts, there's always opportunity for ordinary people to acquire and hold Bitcoin over time. Tyler Durden said, he raises a point I haven't considered. In the end, the rich will end up owning more than the rest of us. It doesn't really matter in terms of how the network is managed, but it does matter in terms of wealth distribution being unchanged. However, what it has done, arguably, has created an opportunity for the not-so-wealthy visionaries to jump in early and become wealthy where they otherwise wouldn't. However, the clock is ticking on that one. I'm hoping I wasn't too late and can still get a 10x. But we'll see on that. A point will come where it will just be an asset like any other, or will simply be currency we use to exchange goods and services, and the chance to become wealthy will be gone and the rich will own the majority, and the cycle continues. There's a little flaw here. He thinks that Bitcoin is just like any other assets, and he says that the cycle will continue. So my take on that was, early adopters gain the most for sure, which is the same for every other breakthrough, such as early Amazon investors. The key difference is fiat currencies let the rich stay rich by sitting closest to the money printer, while Bitcoin kills that advantage. No dilution, no bailout, no backdoor deals, just 21 million coins and the same rules for everyone. You don't need to be wealthy to join, just disciplined. That's a fairer game than fiat, stocks, houses and gold will ever be. And then last one for this guy, this is a big one. Gold has the same principle, said Stock Bulls 12. I said, unfortunately, most of the gold market today is just paper contracts, rehypothecation, meaning there's more claims on gold than real bars. With Bitcoin, you can instantly self-custody it, no paper promises, just pure ownership. Gold also comes with huge counterparty risks. It has to be stored in a third-party vault and is expensive to move across borders. Bitcoin removes all those risks. It's portable. For example, I can move $10 million within minutes in a wallet and is verified instantly. That's why Bitcoin isn't just digital gold, it's perfected gold. He said, meant physical, haha, don't trust any of that paper stuff. I get you, it's all fake. Okay, at least he gets it. You're right, physical gold is the real deal. The problem is, even if you hold the physical gold, the global gold price is still suppressed by all the paper contracts. That means the physical gold is being indirectly devalued by Wall Street, and when you sell the physical gold, dealers will typically offer below spot price, 2 to 5% less, because they need to cover costs and the risks of verifying them. Compared to Bitcoin, you sell peer-to-peer 24/7, anyone in the world, with no middleman and with full transparency. Now here's the interesting part. Someone joined in the conversation, and this guy, he's a full-on doom and gloom type. He's that doomsday guy type. Now I've heard a lot of doomsday type of people that talks about the end of the world scenarios, but I never came across one until now. This is the guy. Zack Attack said, with that explanation you gave of price manipulated, what is the ETF holdings and the price of Bitcoin being manipulated every cycle by events around it? That's the premise of Saylor issuing billions of debt to buy Bitcoin. Who do you think ends up paying for debt anywhere? You need to come out of the pill idea, as you need the pill to control the pill. And then an emoji. I said ETF holdings and Saylor's debt does not change how Bitcoin works. They're just layers on top. The beauty about Bitcoin is the base layer, incorruptible. 21 million supply, no central authority, no inflation. Wall Street can play their game with paper claims, just like gold and ETFs, but anyone can opt out and self-custody Bitcoin. That's the difference. For debt, Saylor is using the fiat system's own weakness to convert dollars into hard money. Who pays for fiat debt in the long run? Savers in fiat currencies through inflation. Bitcoiners don't need a pill to control the pill. They just step outside the system entirely. He replied, not challenging how the Bitcoin network works. Same as with gold, it hasn't changed in its use physically. What has paper gold done to it though? The exact manipulation of converting its value into paper and IOU. Debt is an IOU. Majority of debt burdens the haves and not the haves lot in the end. This is only going to bring eventual collapse, with all the treasures being issued from debt. That's economics 101 that can't be changed. And then he had to correct himself about this. I said, I hear you, but gold's biggest flaw is that it's never truly scarce. About 2% of new supply gets mined every year, not accounting illegal mining that goes unreported, which means its value gets cut in half every 35 years. And because it's physical, it was never fast or portable enough for the digital world. On top of that, as you mentioned, paper gold allowed banks and governments to manipulate it with IOUs. Debt takes this problem even further with every mortgages, every student loans, and government bonds around the world. They all dilute savers and keep them poor. That's why it's time to opt out of this debt-fueled system and save in Bitcoin, fixed supply, no counterparty risks, and instantly portable. He pushed back a little by saying, I hear both sides. I've traveled to places where they don't have electricity. What to say of internet? So these people are an example of extreme have-nots. They don't even know what Bitcoin is. They do know what gold is. And these places will have people fight for the shiny precious and plunder. It's the tangible physical assets that attracts them. They don't trust a device that can hold passkey to billions. That's the problem in my view. If things turn to worst for the world, then physical gold will be what trades, not Bitcoin. Anyway, long talk. Have been dollar cost averaging my few cents for few years now. Hope to get enough out of this eventually to have a farm and live off grid. That's my target. That's freedom for me. Now this is very important, the fact that he mentioned about farm and living off grid, because I had something to say about that. I said, the farms give you independence day to day, and Bitcoin protects your wealth long term. Gold can get stolen from your property, and if you store your gold in the banks, it becomes an IOU. If the internet goes down, you won't be able to convert your gold IOU into money. The The difference is Bitcoin can still be transacted through radio, mesh networks, and satellite. Gold doesn't have that option, so you stay in control, fully portable and censorship resistant, even when traditional systems fail. His last reply said, I imagine a world where everything is destroyed, then my farm, ammo, pets, and any friends and family will be good enough to have me live life day by day. Can grow my own and eat it, that's wealth. The folks who have Bitcoin to give then won't have much else to offer for folks like me. You can't see, Bitcoin will be worthless if apocalypse-like situations happen. It's good as long as equality is available to some extent and people find it aspirational. When it loses that edge, you have bigger things to worry about, my friend. Cheers, he said. How much is enough in the end for one person versus other is subjective. Sailor's billions won't be with him, much like Pharaoh's are now. So he went off a little crazy there, and so this is my last reply to him. He hasn't replied back to me. If society collapses completely, a farm, food, and family matters more than anything digital. But until that day comes, everything under the fiat system still suffers from inflation. Even farmers today pay rising property taxes and inheritance taxes, which might force your kin to sell part of the land to cover the costs. Bitcoin isn't about surviving an apocalypse, it's about preserving your wealth and purchasing power in a world we actually live in, keeping control of your money and escaping the slow erosion caused by inflation. Ignoring Bitcoin in this digital age won't do you any good. It's like ignoring the internet when the world adopted it. History shows that nations that refused to adopt to change fell behind. They got taken over by those who did. Just like how in 16th century Africa, many Africans used glass beads as their currency. When the Europeans arrived, they saw that the locals were using glass beads, and so the Europeans manufactured glass beads. They inflated the African economy. The Europeans were able to purchase a bunch of land, gold, a bunch of resources from the Africans because they were able to create money out of thin air in 16th century. And we're seeing that today with fiat currencies. Government print endless amount of dollars, British pounds and euros. So in order to stop our money from getting devalued, we have to save in a money that is fixed in supply. And the best savings tool that's available out there is Bitcoin. And here are just some other responses from people. Someone said blah blah, all that has been said a million times. What's been said a million times? He also said, and now? Now you either trust the same old system or you start stacking sats. Your call. Anyways guys, what do you think of this whole post and the responses I got from these people in the comment section? If you have something to say, don't be afraid to leave a comment. I'm sure others will learn from your comment. But go ahead and leave a like if you learned something of value, and I'd appreciate you subscribe to my channel for more videos like this.